Hi there, this is Michael Kramer of Mott Capital Management. Today is Tuesday, October 15th. That's around 5 p.m. New York time. We haven't had very much activity yet this week in terms of economic data. That will start to increase tomorrow when we get import price data and export price data. Then on Thursday, the 17th, we'll be getting retail sales data. We're looking for a 0.3% increase month over month versus last month's reading of 0.1. X auto and gas, we're looking for 0.3 versus 0.2. Initial jobless claims had a big jump last week, so everyone will be focusing on this again. Plus, here in the U.S., we've had a bunch of natural disasters with hurricanes. This could potentially push initial jobless claims data up and continuing claims as well. So this will be something to keep an eye out for. Over in the UK tomorrow on the 16th, you're going to get CPI month over month. We're looking for 0.1%. Down from 0.3. CPI year over year, we're looking for 1.9%, down from 2.2. Core year over year, 3.4, down from 3.6. And CPI services, we're looking for 5.2, down from 5.6%. When we start off with the British pound, you can see that it's come down it's weakened pretty sharply versus the dollar, although it looks like it's starting to maybe put in a base here around the 130, 131 level. This is obviously an important region of support at this 130 to 131 region, so we're going to want to see how this kind of plays out. Obviously, if you were to get weaker than expected CPI reports out of the UK tomorrow, or stronger than expected inflation data here in the US, in the import-export prices, or in the retail sales data, that could result in further weakening of the pound. Likewise, a hotter CPI print in the UK could push the pound higher. But mostly speaking, momentum clearly has shifted lower at this point, with support and the critical region really being at this 130 area. A break of 130 is going to open up the doorway potentially back towards 127 or so. When you look at the daily chart, that's also showing us that the RSI has started to shift lower as well. We're not really oversold yet, so there's plenty of room if the pound wants to continue to move lower to do that. Even when you look at it on a Bollinger Band, it suggests we could potentially move down towards around 129.40. I think the upside is probably pretty limited to this point to around 132 or so at the 20-day moving average. The euro's also been weakening versus the dollar. Getting a little bit closer to the lower RSI at about 31. Still room to go on the Bollinger Bands. When we get rid of those, you can clearly see now that we've broken this big uptrend. We clearly have broken through support around 109. It's possible that we could be heading for a target of this 108 region down here, where we have this straight line rally on the day of August 2nd, which was the day of the weaker than expected job report here in the U.S. And so largely we've seen a lot of these gains be erased at this point, and this would probably be the next area of support where we would be looking to. Again, 20-day moving average likely to be a target on resistance, but first you really have to get through the resistance level around 109.5 to 110. That's been an area that served as support and resistance now on a couple of occasions going back over the months. Volatility in the yen has certainly stabilized. The one thing I am noticing here is that we may actually get a chance for a reversal where the yen actually begins to strengthen again. One reason why I'm mentioning that is because if you look here, you can see you have what looks like a rising flag pattern, which is actually more of a reversal pattern and would suggest that we break lower on the yen and potentially start moving back down towards the lower end of this range, maybe around 141.85 or so. But again, we first need to see this break with some form of confirmation, with a break below the 148.5 area. I would think with the next level of support coming around this 146.75 region. Obviously, if we were to continue to move higher, I would be looking for a move back towards this 150.5 area, which is the very upper end of that pattern. Copper prices haven't really enjoyed the Chinese stimulus news, or at least they're not taking it too seriously. Here you can clearly see we have a downtrend forming. The question is whether or not we have some sort of falling wedge pattern that's formed here at this point. It doesn't really look like a very strong pattern. It really looks more like a channel, to be honest. And one that would suggest is that this next area of support at 430 becomes a little bit more critical here, with a break of that potentially setting up a drop to around 4.25 and maybe even to this 418 region. Only when we look at it on the daily chart as well, you can see copper still has plenty of room to go to the downside. Momentum clearly bearish at this point. And even when you look at the Bollinger Bands, again, plenty of room to go to the downside here, potentially to around 4.25. Upside seems limited, maybe to around 443. Or WTI oil has been very messy more recently. You can certainly make a case that the RSI is starting to rise, suggesting momentum is shifting to something more bullish. But we haven't really seen oil really make any meaningful attempts to break over some resistance levels at 77. In fact, it almost looks like at this point what we've seen is a break of a downtrend, and now oil has actually come back in to that and fallen back below that downtrend, which suggests this may actually just be a throwover, and we're actually looking for oil to continue to move down. There's a case to be made here that this looks like a descending triangle pattern has formed, and so it's possible if this was a throwover that the next move in oil is actually going to be a break below 67 and to something significantly lower. Again, I mean, with everything going on in the world, it certainly seems hard to believe, but if you look at copper prices, they're not very strong. And perhaps it's because the market really isn't taking the news about China very seriously. I mean, clearly we can see that there's been a series of lower highs in the RSI as well, also suggesting lower prices. Again, if we're kind of thinking that oil is going to go higher, I think you're probably limited to your upside right here at the base of the triangle around 74.80 or so. Just because, again, we haven't really been able to meaningfully test it, get through it, and we do have these lower highs in place. So until proven otherwise, I think that you're probably looking at a case for oil to continue to move down. The Footsie continues to just really trend sideways at this point. Certainly with copper prices moving down, it's not really going to help the Footsie move higher. We know that it tends to trade with copper prices over time, and so what this is also implying is that we should see the Footsie 100 potentially move lower as well. Obviously, this is your big support level around 81.80. Here's your resistance area around 83.50. Again, if we're just kind of keeping track of where copper is going, this tells us that the next major move should be lower, potentially a test of 81.80. Potentially a break of that level of support at 81.80. The DAX has actually continued to move higher. To no surprise, it seems like the DAX goes up every day of the week, although it did move a little bit lower today after we had some negative news out of ASML that took the whole chip space down here in the US as well. Here you can see your big uptrend that's in place in the DAX. So until this uptrend is broken at this point, we need to be mindful that the trend is still significantly pointing to an upward momentum in the DAX, even though the RSI is kind of just moving sideways at this point. Until we really see some sort of convincing move to the downside, it's really tough to say that the DAX is going to go lower, because the trend has clearly just been higher, despite a lot of negative news in terms of economic news coming out of Germany. It certainly, again, seems surprising, but until there's a break of some sort of support here at 19,200 to 19,300, the movement in the DAX continues to look like the trend is obviously higher. When we look at the NASDAQ 100, here you can see we have what looks like a rising wedge pattern. You have your 3 touches to the upside. You now have 3 touches to the downside. Today, obviously, like I already mentioned, there was some negative news out of ASML, which sent the whole chip sector here in the US lower. You can clearly see right now that the NASDAQ basically came down and touched the lower end of the rising wedge pattern. And so that kind of gives us a sense of what may or may not be happening next, because clearly if we were to break lower tomorrow and see a gap down, we have a whole bunch of gaps that still haven't been filled all the way back to October 7th. And then there's another one here back on September 19th. And really what it could tell us is that the NASDAQ comes all the way back down to this 18,300 region. It would completely move back down to this area if this is a rising wedge pattern. Again, there is obviously the risk we break out to the upside. And if that should happen, we're probably looking for a move back to the highs at around 20,700. It is also worth pointing out that there was an open gap here on the NASDAQ that's now also been filled. So there's no more open gaps left to be filled to the upside on the NASDAQ. And if it wants to go lower from here, it certainly has a setup to do that. But again, upside is probably to the old highs if that's going to be the case. When we look at the S&P, we also have a very similar sort of rising wedge pattern forming. Now, yesterday we got a little bit of a throwover. Sometimes that's not uncommon when you have a rising wedge pattern. Again, you have your 3 touches to the upside with the throwover. We're going to first need to be able to really get below 57.90 and then potentially 57.70. If that should happen, you're going to break this rising wedge pattern and then it potentially sets up a move lower to what looks like part of a bump and run. Here you can see the bump and run lower trend line. Here's the upper trend line, and that would be somewhere around 56.70 or so, which then takes us in position to fill the gap at 56.15. Again, not unusual sometimes to see these straight line rallies treated as gaps as well, which potentially sets up a return to 54.20. There's even a gap all the way down here that still hasn't been filled. And obviously with the S&P 500 at an all-time high, there's no gaps to be filled to the upside either. And so that sort of leaves us in a spot where either the market's going to continue to move higher or you're going to see some sort of reversal. And here again, the rising wedge pattern points to a reversal pattern. And even when you look at the Dow, you have a similar setup here at this point. Here you can also see your rising wedge pattern has been forming. Again, you have your touches to the upside, also very similar to what we're seeing in the S&P and the NASDAQ at this point. If this is a rising wedge pattern, again, we need to break 42,600. If that happens, then it's quite possible you could see a return all the way down to the lows, potentially from August 2nd, around 38,600 or so. So, I mean, it's certainly possible. The UNH reported results today. The market didn't really like them. The stock was down 8%. UNH is the largest company by price in the Dow. Remember, the Dow Industrials is a price-weighted index, meaning that the stocks with the highest stock prices get the biggest weightings. The S&P 500 and the NASDAQ are market cap-weighted indexes. So the stocks with the greatest market caps get the biggest weighting. So the Dow is a little bit different. Nonetheless, it still works. But again, you can see UNH obviously had a very, very big move up here back in July. And now we had this big drop today. So we need to be on watch because UNH, if it starts moving lower, it's going to drag the Dow with it, which is completely opposite of what we've been dealing with in the other indices, which have been led higher by NVIDIA. Obviously, though, the Dow doesn't have NVIDIA in it, and so that's why there's a difference in some of the performance metrics. Anyway, I hope you found this helpful. Until next time, have a great week. Bye.